Hi guys, Sarah Lamont. I am an investor at an early stage venture capital firm based in Boston called F Prime Capital. We invest in early stage fintech, enterprise tech, frontier tech, and then as well as two other healthcare funds that are separate from our technology fund. But I personally focus on fintech, seed to Series B, and excited to be here.
Excellent, thank you. And Carrie, can you hear us?
Good morning.
Carrie and I actually, full disclosure, work together, so I know a lot about Carrie, but Carrie, you want to tell everyone else?
Sure. Hi, everybody, and thanks for letting me Goldcast or Zoom in or whatever we want to call it from California. Sorry I couldn't be there with you today. My name is Carrie Ransom. As Brandon said, I'm the managing director of a pretty new strategic investment fund called Bank Tech Ventures, and we have pulled together over 100 community banks from around the country who we collectively invest on behalf of them and the broader community financial institution industry to invest in the next generation enabling capabilities to really help them continue to digitally transform and find the new products and services that can evolve their businesses so we can continue to have vibrant community financial institutions throughout the country. In addition to that, just as quick background, I have built 8 startups from various stages. I got into fintech about 10 years ago and spent most of my life before that in software. So I've been in software for about 25 years and love to build companies. And therefore, I also get involved pretty heavily, both through the bank tech investments that we make and also in a lot of other early stage companies outside of fintech. So I've got a lot of things in the early to formative stages through a venture studio that I co-founded a few years ago as well.
Perfect. Thank you, Carrie. So we are here to talk about overestimating your total addressable market and how to avoid those pitfalls. But I guess to really set the stage for that, we should probably get some acronyms out of the way. So TAM being total addressable market, but Sarah, you want to kind of go into detail a little bit more on the SAM and SOM that you might see a lot of pitch decks?
Yeah, sure. So I'll kind of start with like top of the funnel TAM. So that's kind of what people talk about the most, and a lot of times what will be shown in the pitch deck. But when you get into deeper conversations with investors, they'll start talking about your SAM and your SOM a lot more. And kind of with each acronym, your market gets a little bit smaller because you apply different filters that'll kind of make it smaller, but also make your approach to the market a lot more targeted. So SAM being serviceable, addressable market, and then SOM being served obtainable market. So you think of TAM, it's like your very top of the funnel, broadest market that you could, if you could serve every single geography, every single customer, that would be your big multi-billion-dollar number. SAM, you might start thinking about which different geographies you can serve, which different products you can offer in the early stages, and who your actual target customers might be in the earlier stages. And then when you get into SOM, you actually start thinking about, okay, who are my competitors? How much market share can I actually capture, especially in the first few years? And so TAM is kind of like the one you hear the most headlines about. It's probably the one that you'll present in your pitch deck. But when you kind of start getting into deeper conversations with investors, you'll start getting more into the weeds of like, who in the next 3 years will I realistically be able to serve, and what markets can I capture? And you'll start thinking about your TAM down the road, because your TAM will kind of always be a little bit different a couple of years after you start your startup.
Yeah. So Carrie, I guess, how do you move down from TAM all the way down to your SOM? Like, what should a founder be kind of thinking about in order to put in the right perspective?
Sure. Good question. And I mean, we could probably spend the rest of the session just on that question. But I'll give, I guess, a couple thoughts. I mean, one is, a way to think about the market overall. One way to do that is to look at the entire economic activity in that segment of a market. And I would say that doesn't necessarily mean that's the TAM, but that is sort of a top-down way to start as you start to look at, okay, you have this many potential customers or this amount of economic activity in this area. And then as you start to think about whatever you're doing in that market, there may be a portion of that you, in theory, could sell or capture of that economic activity. And so to me, that's sort of a somewhat of a top-down way to start with it. And then, as Sarah said, then you have to start to get realistic about where are all these people or customers, and how might you be able to get to them over time. And that's where you start to filter down. The other way that I like to see people do it is to sort of construct it from the bottom up. And I think having both a top-down and bottom-up analysis of this helps because it's not an exact science, and especially with the startup. So trying to use both helps get to what I would characterize as a little bit more of a triangulation of, are you in the ballpark? Are you reasonable in how you're thinking about it? I've seen, I think we'll talk more about this, but I've seen plenty of people try to associate the entire economic activity of a market as their TAM. And that doesn't mean that they can totally capture that, because they may have something that, a customer is spending a fraction of a percentage of their contribution to that. And so you have to filter things down through that as well. So I'm sure we'll talk more about that, but hopefully that gives at least a general sense of how you might be able to construct top down and bottom up.
Yeah, and it's a great kind of segue where you can often find in a lot of these pitch decks or pitches in general, this kind of, we're going to boil the ocean scenario. Look how big our market is, 8 billion, 9 billion, whatever it might be. So Sarah, I guess when you see that, it's become a staple, right, of every pitch now. What are your first impressions of the founder of the company? Is there ever a size you go, well, that's not realistic? Or how do you immediately think of that from the VC standpoint?
Yeah. We talked about this a little bit. Like, I think you can start really, like make or break your credibility with an investor if you have like a number that's so large that it's kind of like, oh, I don't know if you're like being super thoughtful about your approach yet. So, I mean, I don't have like a specific threshold, but sometimes if I see like $1 trillion, I'm like, okay, well, that's probably a bit smaller than that. But like, I think like to Carrie's point, like if you're in like the loans, like, in the loan space, like for fintech in the loan space, like you might not want to use like the global loan origination volume as your TAM. That kind of says like, I wasn't cutting it properly. I wasn't doing it. I wasn't using like the bottoms up approach of like customer and like yearly annual contract value, et cetera. So I guess like one pitfall is just not being super like realistic and thoughtful about it. I think in venture especially, I think you can be, there's a lot more room to kind of like paint your TAM, whereas in like private equity, it's very like, you can spend 50 slides, like cutting your TAM a million different ways by product and geo and customer. Whereas I think in VC, like it's definitely more of an art, because a lot of times you are kind of making your own market. But yeah, I think that's one thing, is just like being really thoughtful about how you construct that number, especially because when you get into further conversations and through diligence, your investors or potential investors will be like trying to construct their own market size. So like they're going to be pressure testing it a little bit too. So making sure that you're being, thoughtful around how you do it and the logic is able to be followed is super important.
And I think we talked about this last week on our kind of prep call, but Carrie, you kind of see when we review the market of a potential company, you look at it both ways. You're not always looking at it from a pessimistic view, but also where else could this go, right? And so, Carrie, I mean, we work with a lot of companies that kind of do that already.
Absolutely. And I think that it's a little bit of a double-edged sword. And I obviously can't see the audience there. And, I think both founders and investors are complicit a little bit, but I've seen people pass on opportunities because they say the TAM's too small. And to your point, Brandon, that may be exactly accurate when you're talking about the first product or service or the first customer set that they're focusing on. And as they start to have some success, then that could unlock additional opportunities, which could be expanding within the same market segment that they're in into other products or services, or taking that into other as well. And so on one hand, and I'm sure founders sometimes get frustrated because on one hand, they're being told, focus, go find an area that you can dominate. And that may be small, but that success also could open up other opportunities. And, I think just to put a final thought in when it comes to what we're doing with community financial institutions, typically when people are citing data around that, they're talking about the number of community banks, number of credit unions that are out there. And I think the challenge that a lot of folks face in that space, as one example, and it's not alone, is that tends to be a shrinking number. And so for a lot of people, that's an easy way to dismiss, oh, this is a shrinking customer, so your obtainable or addressable market is actually shrinking. So how many actual contracts would you be able to get, or how much market share could you get in a shrinking market? And so you have to really, as a founder, think about how do you explain how you're going to still succeed, and that likely could be that you need to take it into other markets over time outside of where you're focused today. And I think the last thought is just that you need to understand from the investor standpoint, what do they put a lot of emphasis on? Because there are people that really want to invest in markets. And if they see a really rapidly growing market, that's going to drive them more than a specificity of customers, for example, within a market. And we've seen that in fintech over the last few years, that as a tech investment market growing rapidly, even though there are certain customer segments within it that maybe aren't.
And so I guess that's a kind of a good point where, so Sarah, are there certain things that maybe F Prime looks like, or you in particular kind of look at and say, okay, that is a good, regardless of what the total addressable market says it is, like we go, this is a good idea, regardless of the market size, right? What are the kind of things that you want to see sometimes that a founder puts out there as it relates to market penetration?
Yeah, I think it's a good point to make, that a lot of times, like, TAM is almost, in some cases, like I think with certain industries, can almost be like a little bit of a tick the box exercise, and it's almost more like, what are the macro tailwinds driving this industry, because we know it'll be bigger. So for instance, like if I were looking at like a security, like an enterprise security solution, like that's a market I know exists. We don't really need to do a lot of like market sizing work around that. What might be more important is like, how is the C-suite thinking about cybersecurity solutions these days? Like what are the macro tailwinds driving, or headwinds driving that market? And so like another example would be like crypto security. Like that's probably an emerging area that like we don't know the exact market size. But we kind of know that there's a huge tailwind with crypto right now, maybe not in the last couple months, but over the last like few years, we know that there are a lot of hacks going on. There's a lot of headwinds, with that, which is a tailwind for the security market itself. So I think with those, like with those markets that are less defined, we don't know the exact market size. It might be more like, okay, we've validated it's probably somewhere above $1 billion, but what we a little bit care more about is like, how are customers thinking about this space? Like very high level, are there really great tailwinds driving the need for this sort of solution right now, rather than nitpicking over, is this like 9.9 billion or is it like 10.7?
Right.
Like, it's like, that's like, very less important. Both are wrong. Like, both are wrong answers. They're just, some are more right than others. So you kind of have to harp more on the qualitative side of it.
Right. And there's this kind of segue into just general product market fit, right? At that point, where if you want to really figure out your serviceable addressable market or your obtainable market in any way, are you solving a problem that even exists for that market, right? And so I know something that Carrie has come across multiple times, but I would love to kind of hear a story from both of you about a time where it was just so off the mark, right? If you can think of any presentation you saw or what have you, where you just go, this is just not even answering a problem that exists right now. I'll put, I know
there's a lot in crypto
I'm
right
sure,
now.
I'm sure there is. And we didn't prep for this one, so I'm putting both of you on the spot a little bit.
There totally is. I mean, I look at a lot of, we kind of lump crypto into fintech. So I did a lot of deep dive into there. Like, I'm trying to think if there were any that truly missed the mark.
And I guess, and if you can remember one, what was the reason, right?
Yeah.
If you could pinpoint like why.
Without being too specific.
Right, yeah, exactly. I don't want to say who it was or anything.
I've got plenty, so.
Yeah, Gary, you want to go first?
Sure. So, I mean, I'll cite one that and Brandon, you've heard me use this term, I think, frequently. There's a class of, and often they're very technical founders who develop novel products or solutions that they think are broadly applicable to the marketplace. And what I tend to run into when I start to have a conversation with them is what I call technology looking for problems to solve. And often, when you talk to them and you start to get into things like total addressable market, they look at the entire world, every business, as a prospective customer, as an example. And they have a hammer and everything looks like a nail when you've already built your hammer. And so the challenge you run into there, and I'll just give you a specific example. I had a company several years ago that I really liked the founding team, and they had a prediction capability. And I asked them, what are you guys really good at predicting? And they said anything. And that is immediately a danger, because that generally means when you talk about things like product market fit, they're going to be attempting to fit to a lot of different things. And what I usually see happen is they end up saying yes to a lot of things, which isn't a terrible strategy when you're an early stage company and you're trying to find where your best SOM might be. But what happened with them is they ended up a year or so into their business with 10 or 12 customers, none of whom looked at all similar in any way. And they, on their side, viewed that as a very positive thing. From my perspective, I viewed it very negatively, because they really had about 10 different consulting projects that were very one-off. And that does not look like a highly scalable venture investable business. It looks like a potentially interesting business if you can provide those solutions at a profitable price to sell and deliver and support. But when you have in your mind that you're going to go build something that has really explosive growth potential, and there's no consistency in the go-to-market, in how they got those customers, what problem they solved, et cetera, there's no through line there. It makes it really difficult. And so I think it's okay if you start out a business from that point of view, and then eventually you find this stream that is racing really rapidly, and you see a lot of the same problems or a lot of the same customers in it, and you figure out a machinery to go do it. But that's where I often see a mismatch, and it's fairly consistent that you see that mismatch where somebody has a handful of customers. They said yes to several. And one of the things I'll say to a lot of founders when I run into them, if you're not firing some set of your customers pretty soon down the line, once you find where that really that stream that's really moving fast, or where the gold is, however you want to analogize it, then you're probably never going to get to that really high growth opportunity that you think you want. And it's fine to go build a business that has a bunch of diverse customers. It's probably just not going to generate the right kind of scale and return that people like Sarah and I and you are looking for.
Right.
And Carrie, I think that kind of goes back to your point around the balance between investors wanting huge TAM or SAM or SOM or whatever, but you also have to be like really specific about your initial target segment that might be smaller than it'll be in 10 years when you've moved on to other verticals or products or geos. So mine is actually very similar. Keeping with the crypto theme, there's like in the NFT space, but their customers were like, in the sports category, the large like Fortune 500 category, like the fine art category. And I think serving different use cases, and like Kara saying, like kind of got into this very like implementation-y, like services type business. And I think if, when businesses like that, which that market itself is a tough one to bet on right now anyway. But if you're doing that, I think it's a lot more attractive to investors if you're going after like, okay, this is the vertical and profile of customers we're targeting. We're going to like win that segment. In a couple of years, maybe we can upsell them these types of products, or in a couple of years, we can move on to like this vertical, or in a couple of years, we can move into this geo. Like that being able to show that you have some sort of formula for attacking a market and then like replicating that formula elsewhere is a much better approach than doing everything for everyone all at once when you start.
Right. So that kind of goes into like almost the stage of the company as well, right? So you're looking at kind of the pre-seed, angel, venture backed. Obviously, no market calculation is going to be perfect, regardless of the stage of company at all. But is there more leeway given to an early stage founder versus maybe someone who's going after private equity financing, right? Who may need to have things more buttoned up, right? And so I guess, how does a founder think about its market penetration and obtainability based on its stage alone?
Yeah, I think that's a good point. I think you can kind of, a Series C founder would definitely be held to a different standard. And at that point, I think like they've probably already proved there's a market. There'd be a lot less discussion around TAM at like Series C fundraising. Like you've probably already captured a significant portion of the market. You probably have a great customer base already. I think it is in the earlier stages where like TAM, like especially if you don't have a product yet, it's a lot more harping on like, what does this market actually look like in 5, 6, 7 years? And I think there's a lot more of like exploration of, oh, who's my customer base? Will I be targeting traditional financial institutions? Will I be targeting fintech companies? How do those different contract values look like? If it's an enterprise play, if it's consumer, like, how am I going to price? Things like that. Like those sorts of things are not set in stone yet, but I think become a lot more of the discussion at those early stages around, and it flows into a lot of other stuff too, like your business model, how you charge, which customers will I target? We talked a lot about like, competitive landscape and how your SOM, I guess, really takes into account how crowded the market is. So there's another balance of like, okay, this is a massive market, probably not a winner take all, but it's really crowded, like it's really competitive, versus this is like super green fields, not many people playing here, but it's a smaller market. So I have to kind of bet that I'll win like 70% of it.
Yeah.
So another one that's hard to find the balance between.
Yeah. Well, Carrie, you and I, we do this all the time, right? As it relates to kind of our ecosystem and, working with community FIs. And so, especially nowadays when you're seeing new products or services pop up that have never existed before, right? That are pinpointing very specific problems that no one really looked at in some way. So, Carrie, I guess from your perspective, when you're thinking about the market size of a potential product or service, what are some of the things you immediately think of that say, okay, here's who I want to talk to, or here's what I want to do to understand the ability for this particular service or product to really capture that entire market that I am cultivating in my own head?
Yeah, a couple things there that I'd probably focus in on. One is I really like going down the path of understanding, what are customers doing in this space today? How are they attacking the problem, especially if it's a newer, better way to do something? How are they doing it today? How much are they spending on that? And can you get to some rough estimates at a customer or market level in how they're doing it, which could be people that they're just throwing bodies at it, or it could be that they're paying for it in some other way that you're going to greatly reduce. And then there's always that question of how much of that, back to what Sarah was saying in how they're going to charge, how much of that can you reasonably capture? And what are the ways that you can go about trying to determine if you reduce the cost of doing something by 90%, how much of that 90% savings are you able to capture? Is it half of it or only a couple percent of that, right? Those will be, and so that would be the first, is really trying to understand what's happening in this space, in the industry as it is right now. The second one that I like to go to are adjacent or other industries that maybe are slightly more advanced in this area. And can you find a place where maybe another company has done something that you can relate to and say, they came into this market, here's how this market formed because of their going into it. And to Sarah's point too, was it a fairly monopolistic success by being in there, or was it a normal market distribution over time where you had a couple more significant players and then a lot of really niche ones? And then what were the dynamics that played into how that market evolved, and do you think this one will evolve in a similar way? And so that's where I find people who have come from other industries sometimes have an advantage, because if you've lived in one industry segment most of your career, you really just know how that one has evolved and formed, as opposed to seeing that different industries or different markets, whether those are geographic or industry types or customer size, enterprise versus small to medium-sized business versus consumer, they evolve and change in different ways. And so I think being able to have that viewpoint, and I find it super credible when a founder will try to explain this market and how it evolved is actually one of the inputs that we're using into how we think about what's likely to happen over the next few to 5 to 10 years in this area where we're focusing our attention. And here are the indicators that we think are telling us that it's going to behave similarly. And I think that just shows that they're thinking about it in a fairly strategic way. So just summarize, where have you seen similar dynamics occur? And then the other would be how do you go about determining how much of the value that you're creating for this market you're going to be able to capture, are probably the two that I really like to hone in on.
Yeah, that's great. And I guess the kind of flip of my question earlier, where it was, a founder that may have just missed the mark for whatever reason, totally overestimated what was going on. Was there one that you met, or you can think of a story that for the first time, you go, hitting the nail, literally, to use Carrie's phrasing, hit the nail on the head, right? Completely understood the market right off the bat, was easily and intuitive to understand, from you as a VC standpoint, and also from anyone else that you had to bring that argument to next, right? Because that part of the ability of a good market argument is for that second person to be able to tell a third party later on, right? And so, Sarah, I guess, is there one that really stood out that you said, yeah, I get it, these guys get it, and everyone else should understand right off the bat?
Yeah. I'm trying to think. I don't think I've ever done there's so many different approaches to the market sizing. As I was saying, there's no right answer really. It's kind of just some answers are more thoughtful and there's more logic supporting it. But they're always kind of wrong. So I don't think I've ever done an exercise and I've matched the founder's TAM by any means. But I think there's one example of an earned wage access player. And so for those of you who don't know earned wage access is, it's basically getting people paid the same day that they work. So instead of getting paid every 2 weeks, they get paid every day. And I think this founder did a really good job of identifying who that's relevant for. It's not really relevant for salaried employees, because the people who actually need their money the same day are people who are typically living paycheck to paycheck. So did a really good job of identifying who the actual customer was. Did a really good job of kind of building up their market size based on their pricing. So it was okay, well, our margins will increase by this much over the next couple of years. We'll renegotiate. Our pricing will change. Our pricing will increase. Our user base will use our product more. They had a really thoughtful approach to every single thing. If you can kind of think of it as the waterfall building up to this is how our market expands over time. And it was less almost less conceptual, and it's very specific around how the customer base grew, the pricing grew, the margins increased. It was just a really, really thoughtful approach, so much so that it felt like one I didn't even really need to recalculate. It's just let me just validate the inputs. And so that's one example I'd say.
Sure. How about you, Carrie?
So the one that always comes to mind for me, I was involved in a company about 20 years ago, and the beauty of the business was that there was a regulation change that really drove demand. And so the regulation was pretty easy to understand. The people that were affected by it was pretty clear. And so all of a sudden it was, here is the need that this group of people are going to have in this timeline immediately, and we're building a solution to make sure that they comply with this new regulation. And so it was really about how much market share can we get so quickly? And will they pay what we're trying to charge them for it? And it was very, very clear. And then for us, the sort of second level, kind of to Sarah's point, was this other potential regulation that unlocked a 100x bigger market opportunity if it passed. And it was, this one is very clear. We're going to go achieve it and get as much of this market as we can. And if this other bill that's in Congress that is being worked on passes, and this is a direct regulation as a result of it, that it was kind of in that case, it was kind of a bet that, hey, we have a good business here. If this happens, we have a great business that starts to expand. And so I think that's the one when I think about like clarity, which is and in that case, you had this external hand that was driving market demand. And that doesn't happen all that much. It happens at times. But I think things like that can help provide clarity. It just doesn't happen that regularly.
Yeah. So I do want to, before I open it up to the audience Q&A, I just want to harp on the product market fit part one last time, which is the role of kind of like customer interview in that approach to understanding your total addressable market, your product market fit for the service or product you have. And I know as part of our roles, right, that's a major piece of it, kind of understanding what that market size is outside of private and public resources we get access to. So if I'm an early stage founder, especially from a pre-seed or seed level, how important is that customer interview aspect, or potential customer interview, I should say?
Yeah, I think it depends on the investor you ask. I'd say I personally day to day focus more on like the customer voice than I do on TAM. Because I think with TAM, I don't mean to undermine it, but I think a lot of times it is kind of like, if it's sufficiently big enough, we're not going to stress about whether it's 10 or 11 billion or whatever. So it's kind of like, okay, if it's passes a certain thresholds, kind of meets our standards. But like customer interviews, you kind of really want to underwrite an investment based on like fantastic or exceptional customer interviews, hearing like, I would, like, if I were to cut all of my software spend, I would have to keep this though. Like, that's kind of the sort of thing you want to hear. Or, oh my God, like this doesn't exist today, but if it did, I would pay X 100K, something like that. Like, that to me is so much more important than like this incredibly massive market, but very lukewarm customers that may or may not ever buy.
Yeah. And Carrie, we come from a unique perspective where a lot of the things that we look at are specifically services for customers that are also RLPs, right? And so maybe from that perspective, kind of working in a firm or with a group that really our investment theses are dictated by these kind of customer interviews.
That's right. Yeah, I mean, I'm like Sarah, that I put huge emphasis. And one of the questions that I'll often ask a founder is, they described their business in one way, and what I will often ask is, how does your ideal customer describe what their problem is, or what need they have, what they're looking for, just to make sure they understand how their customer talks, how they think, how they make a decision. Because if they haven't done that work, that can be pretty scary, that they think they can just shove something into the market versus almost feel like their customer's been part of the co-creation of the solution. And that's not in every case. There are really groundbreaking technologies that sometimes require the proof and the development of it and demonstration of the value before people can really fully grasp it. That's how really breakthrough things happen. But I think in a lot of the things that we see, having a deeper connection to the true customer problem, to true customer voice, and is critical. And I'm probably going to run the other way if they haven't done that, or they aren't really thinking about that, like the ideal customer, and an obsession about how do they go obtain one of those, because that ultimately, there's plenty of really novel things that have never really seen the light of day, because they didn't meet the customer where they were. That's partly why, one of my favorite exercises for anyone to go through is the jobs to be done process, because it really helps you atomize what's going on in the life of the people that you're allegedly trying to go help.
Now, do you guys think that is mainly because of the focus on those earlier stage companies, and maybe the later stage, it's more the concrete numbers, data analytics you can glean from the market and how the company's doing? Or do you think that's still a major piece along the path?
I think at like the later stages, like the customer voice is still important, but it's less like you kind of already know that problem exists, and if it's being sold sufficiently, it's like you've kind of solved the product market fit. So it's less like a let me pressure test, does this market exist and are people willing to pay for it? Because that's, buy your Series B, Series C, it's pretty much yes most of the time.
Mm-hmm.
I think when you get to those later stages, it's maybe more like stacking up against the competition, like what's your moat? What is your win rate against competitors? I think even in the earlier stages too, like not to make this a conversation about competition, but a fun question is like, when you have talked to customers, are you selling greenfield? Are you going up against like established competitors? Because you'll get a lot of insight into like, okay, if there are no competitors, like have people failed in the past? Like, why hasn't this been done before? And if you are going up, some like established players, why are you better? Like, how do you win against them?
Right.
Yeah, and I think just to pile on that a little bit, Sarah, it's that whole idea of what are they doing today as well? Is this a replacement sale versus a completely new way of doing things? And I think something we see in our space, particularly Brandon, is in some cases we have to really delve into who do you need within the customer to be able to use this successfully, and do they have the skills? Do they have the people in place? Can they even go find those people, recruit them in to do this? And those are all potential complications that, again, could extend time to value for the customer and for the business that's trying to sell to them.
And that's the other piece, right? Is the education component to the customer itself, right? Because there you have your addressable market, sure, but then maybe only a small portion is ready to adopt this new product or service. Or it might require a huge educational lift on the part of the company, in which case, how do you factor that in to saying, yeah, we're definitely going to conquer this market? It might take us longer than we expected, though, right? Given the changing trends or thought processes of our target customer base.
Yeah.
I do want to pass it off to audience Q&A. So we have both an in-person audience and a virtual. So if you are virtual, there is the Q&A portal in the top right of your Goalcast screen. But I want to see if there's anyone in the audience right now to start. Yep. I'm going to bring over a mic. I'm going to have 2 mics passed around. That way I don't have to keep getting up. And then if you want to just kind of hand it off to whoever might next have a question.
Hi, my name is Nee. I lead a company called Dialysis X, and basically we figured out a way to help kidney failure patients have dialysis without needles. And my question is connecting SOM and SOM with the pricing of your product. Is that really a two-way relationship, or is it more like a one-way dynamic between those factors?
Yeah, I think so you're asking between SAM and SOM, like how like the pricing relates between the two?
Yeah, like should the pricing or your projected pricing for your product, should that influence what your SOM likely, right?
Yeah, I think like
influence the other way.
I think when you're like funneling down, I think there's like kind of 2 axes, like there's TAM, SAM, SOM. And I think along that like funnel, if you were to do your calculations in the year 2022, you should try to keep like your today like pricing the same, like keep that constant. But you can then, if you wanted to project those 3 figures out 5 and 10 years, then I think that's when you can start to flex like the products you have, the prices you have, the geos you serve, et cetera. So I think that's kind of how like your SOM will change over time based on like who's in the landscape, the different geos you serve, and pricing too. But I think if you're calculating all of it today, you want to keep things like pricing constant based on, what you do have today.
The only thing I would say is just it also depends on how high fidelity you know the pricing to be. You may have to put it within a range, either based on how much the customers are sending in this area today, And back to what we were saying earlier, that how much of this in the spend, the way they spend today, are you able to capture with whatever solution you have? And the earlier you are, the harder that sometimes is. So I think to Sarah's point, it's less about the specificity of it, and it's more about how did you construct it, and is that an honest, an honest formula, I guess, is really how we would probably tend to look at it.
Yeah, another question here.
All right, thanks. Denise Valenti, I have a small bioscience company, IMAD, impairment measurement, marijuana, and driving. We're having a unique problem in that many people have entered the space with no background in driving. And we already know and are aware we're probably one of the stronger companies with the science and the expertise in driving. We're finding that we're spending a lot of our time and energy in educating our public and the eventual customers with minimal returns on that, partially because there's no place for them to get some of the education. We're just trying to sort out, where does the price point be where you monetize that? And if we monetize that, maybe we're missing out on markets for our product later. I know it's, and new industry, I'm sure, faces this, any new industry.
Carrie, you want to jump on that one?
I think my initial reaction is you said you have, sounds like competitors coming in that maybe don't have the same level of scientific evidence or specific background. I think that's a reality. Is I think as a founder, you have to be open to this idea that there are going to be people that come in that don't know what they're doing, but if they're better at selling, they may capture some customer, and the customer ultimately has to make a determination of the trade-off risk between the most elegant solution and maybe something that is just incrementally better. And sometimes that can be hard when you are really technical, or you have the highest integrity solution, and you can try to play out the game theory of what might happen. But that was partly why I was saying earlier that I like looking at other markets and how they've evolved. And if you see a market where there was a really, really novel technology that didn't win because other people came in with good enough solutions and took the market by really a better distribution or go-to-market strategy, that should be something you really look at and pay attention to and say, oh, wow, perfecting our solution may actually be the thing that kills us, as opposed to getting us the best opportunity in this market. And then again, it depends. If early players, there are other markets where early players have come in with not very good solutions, overpromised, under-delivered, and maybe then a regulatory hand comes in and has to clean up a market, and they look for a more evidence-based solution. So I think you just have to study what's happening in the space that you're trying to go into, and timing is critical. And being early is the same as being wrong, and you may not be able to monetize educating the market, but you have people that play a long game in certain cases and say, we know we have to do this to establish brand and establish credibility, and this is going to ultimately be the way we get pulled into the market. So it's hard for me to say, other than I guess hopefully there's some advice in some of those comments.
Well, your comment about the regulatory market, because that's exactly what happened, and it shocked our industry. In previous decades, tools used by police officers roadside did not have to go through the FDA. But because of some claims being made by breathalyzers that are physiologically not at all possible, we now all have to go through the FDA.
Well, that's the other thing. Are you waiting on some sort of major macro trend shift, whether it's a regulatory environment change or just a major change in consumer habit as it relates to your product? I don't know if you can wait on that. I don't know, Sarah, you want to kind of speak?
Well, yeah, what I was going to add there is if you found it difficult to educate customers, or?
We're getting invited to give our expertise for free at programs. Now, our solution, which is something we should have done earlier, is just to hire the business and marketing expertise up front. We didn't do that.
Yeah.
We didn't have a product.
Yeah. Well, I think especially for one a product that requires a lot of like regulatory and like, scientific expertise. I think there's usually a longer haul in the first few customers, because it is like, as we were talking about, it's selling your product, but also selling like the broader market and like, having to sell the vision of like why that exists. So I think what like the advice I would give is, the first few customers are tougher to get. And I think like really using those few early customers as your champions and like using them for marketing in terms of case studies, but also like referrals, like that's really, really key in the early stages around education. Like use your customers as your marketing, get your marketing department to put out case studies on like how this helped them, how this helps them skirt some like, regulatory issue or something like that. Like using them as your champions is really important.
It's fun.
Anyone else? Yep. Actually,
I got it right here.
Oh, you got perfect.
Jeremy Brooks with Human Interest. We are a current fintech company right now. One of the things you guys said early on from startups is where the company asks, okay, who's your clientele? Basically, you're saying, okay, we do this for everybody. Curious where you see a company right now that's doing so well in such a targeted space and is projected to have great returns for, say, 5 to 7 years. What's the expectation after that when it's such a niche market right now? What's the ability for you guys to help them out, or what are you looking at to say, okay, we're good for 5 years, but where are you going after this?
Yeah, I mean, I can go down the list on a few. Yeah. Even ones that Carrie and I are looking at right now. I mean, there's in the space that Carrie and I look at, in fintech for that matter, there's this kind of point solution set of companies keep coming up, right? So when we work with a lot of community FIs and say they want a silver bullet, right, that will solve 7 problems at once. And there might be a few that solves 2 or 3 at a time, but usually it's kind of a patchwork, right, of different companies that solve a larger issue that the bank is hyper focused on, but doesn't realize the ancillary issues attached to that one. And so in that kind of strategy, when we look at our portfolio, we kind of look at our portfolio as a basket of complementary goods, right? Where they're all partners and customers of each other, and therefore can leverage each other's knowledge base, experience, customer pipeline, what have you. So there's a story that we were down in Little Rock for a conference a couple weeks ago, and I was sitting down with a few banks that were having this question of just kind of their digital customer onboarding, right? How do they get a customer from a prospect? How do they find them prospect? How they get them engaged? How they convert them? And how they have them re-engaged with their online portal. And I riffed off about 7 companies in a row, like, well, this one does this one does that. And they all know each other, right? They all work together, but that's kind of overwhelming, right? Especially to a bank that's conservative in nature. But that's kind of been the piece where, for us, the 5-year out strategy, it might be mergers, it might be acquisitions by their complementary. Now they're in that group, there's a clear kind of name brand that will lead that charge, right? And that's usually based I know for Carrie and I's sake, on the founding team. Is this kind of the right jockey to back to kind of spearhead this campaign, so to speak. But I know there's others that I'm sure Sarah's come across that are, so from the very outset, you think this might be a home run, right? Because bank tech is not really in the business of unicorn hunting, right? Looking for like the singles and doubles in the banking space.
Yeah, and I think like doing everything for everyone is so different for every solution. Like I was trying to think of a couple examples of like, like if you serve fintechs today, like how will you eventually serve financial institutions? Like that's a huge market, but like they're still broadly doing the same sort of thing. It's not like you're serving like fintechs, FIs, and like biomedical companies. Like it's still in the same wheelhouse. There are examples of like, okay, if you're doing like document parsing today, how can you extend that into like, I will also do like fraud detection. There are examples of like, okay, if you're doing like banking as a service in Nigeria, like how will you go and do that in Kenya? I'm just thinking of like examples of the last like 2 weeks. If you're doing like crypto data for Solana, like how will you do it for Ethereum and like Algorand? Like, so it's still like in the same universe, but you definitely look to see how they can expand. And they're like specific, you know, it's still a small universe. Like how can they expand to kind of serve every customer in that little universe that they're in.
Yeah, that's right. And I think to Brandon's point too, the way I think about it is I call it proper capitalization. Is if you're focused in a fairly small area today, have the proper capitalization so that you don't put yourself in a difficult position where you're trying to go chase something that you potentially don't have any business going after because you got too much capital into your balance sheet, or you have people that are telling you you're focused on something that's too small. And so it's kind of a double-edged sword to some extent. But if you focus on solving real problems, what I like to say we really look for at Bank Tech are people that are capable of solving real problems that community financial institutions have today with a technical architecture that is oriented toward the future. So they may be in a place in a year or two where other market dynamics occur, and they can maybe embed their capability in other solutions. And so they might have direct customers in the community financial institution space, and then they have an API solution that other people are consuming that are more technically capable, as an example. And so I think thinking about where you may go in the future is a little bit more about, and this is, I think, the founder's job or the CEO's job is to continue to be out on the front edge as you evolve, if you want to keep growing. But when you're properly capitalized, then you have opportunities along the way to potentially exit and still do okay. But I think that's the navigation that you have to go through. And I think Sarah said this earlier. This is an evolving. The whole TAM, SAM, SOM topic is an evolving topic. It's not a one-time exercise when you're starting the company and then you never look at it again. These are things that I would say the growing and shrinking of them is happening at a more rapid rate than it ever has. And so it's something you need to continue to evaluate all the time, and adjacent opportunities would be a part of that as well.
Anyone else have any questions out here? There was one comment that came through from Stephen Goodman, talking about the education of the market, going back to that topic, is an underrated necessity. It's a big part of the companies creating a new category, companies trying to replicate or replace incumbent systems, or that are leading a new technology process. So what startups tend to not invest in is the customer market education and over-rotate on vague community or user community focus rather than focusing on the buying community. So that kind of speaks true for Bank Tech. I don't know if F Prime sees that a lot too, because we're usually working with startups that are B2B, where their customers aren't necessarily going to be the end users, right? So I guess, is that something you guys take into account with F Prime?
Yeah, I'd say it always comes up in like first, second meeting is like, who is the user? And like, that's important to know like who's the buyer, because the user has to be going back to like the voice of the customer. Like there are two kind of stakeholders you're selling. The user has to love it so much that they're like championing it to the buyer.
Yep.
A lot of times, especially in B2B. So there are a lot of, like in the employee benefits category, I mentioned earned wage access, but like in the benefits category in general, like your employees have to like theoretically love a benefit so much that it's worth HR's, budget every year to pay for.
Well, that's how you kind of almost develop a market out of thin air sometimes, right? Because you think there isn't going to be a solution or a market for this. And then when you have the employees, or in this case, whatever, users championing it, that's kind of, when we look at it from Bank Tech, if you have all these bank customers saying, we want XYZ that this bank offers, that becomes a new market, tangential market that company didn't have access to before.
Yeah. That's a good point, Stephen.
Any last minute questions? I'm not seeing anything. Oh, we do have one. So question around, this is from Prakash Patil. Question around SOM and why the SOM may be based on targeted strategy around GEOs in market segments like SMBs, what are the common, sorry about that. What are the common factors that may limit your reach? Example for a product, operationalizing the support structure for multiple goes, may be difficult for a startup with few employees. So the crux of the question really is, what are the common factors that may limit your reach?
Yeah, in fintech, I mean, I think the big one is like regulatory environment. Maybe not, I guess in the US, it's like you're mostly just serving the US, but the one I was just mentioning in Africa, like that's a key one for expanding into like you're dealing with multiple countries. It's a whole, different regulatory regime. That's one. I think honestly, like competition is another. Like some spaces, like you'll, with every like incremental product you add, you kind of, your roadmap almost leads you to different competitors. So sometimes that product roadmap will kind of factor into how you think about like, your competitive differentiation per product and how much market share you can capture too.
Carrie, you want to add anything there?
No, I think it's also a function in some cases of who the team is, where you're starting. If you're starting it in a certain geography, as an example, and you're saying we're not going to focus here, we're going to focus in some other place, I think you just have to have a good explanation as to how and why you're doing that, and what's your. In many cases, we see companies that are starting in other countries that want to come into the U.S., but maybe they've never done business in the U.S. and they don't have a clear strategy for how they're going to come get the market here. And that we just need to have a better understanding of how you're going to do that and be successful. And there are cases where you could start in a home market where you are, if the dynamics of that customer in that market are similar enough. But to Sarah's point, in things like fintech, in some cases, the regulations country to country may be unique enough that you have to really navigate through that and explain why that's going to allow you to expand over time, or why you're starting where you are. I think it's just, again, a lot of this is about a thoughtful, strategic founder exercise. And what I tell founders all the time, I don't, especially the early stages, I don't expect that you have this all figured out. I want to understand your process. What is your process and your plan? And I think TAM, SAM, and SOM, to some extent, is about planning.
Perfect. We are right at about time, unless there's any last minute questions here. Well, I just want to thank both Sarah and Carrie for joining us. Sarah, I know it's early here. I know it's earlier for Carrie over on the West Coast. So appreciate both of you giving us your time. Thank you again.
Thank you both.
Great to be here. Have a great day.